All right. Let me do this disclosure. Let me do this disclosure in 1 second here. 1 second. All right. Disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. All of my trades are placed through T3 Trading Group. There's my position disclosure. I got out of Peloton. I got out of Robinhood. I lightened up in a bunch of these longs. I shorted a T-triple-Q kind of near the close, keeping a little bit overnight. And I've got some of this Lucid short. All right. Just give me 1 second and I'll start the meeting. What is Josh saying to me? What is the max drawdown from high today you think Qs could get to in an absolute best case scenario for shorts? 304? Like if you want absolute best case scenario? 304, you could pull back to 304 and still be bullish. More realistically, this previous pivot high, 308, hold that as support. It's a big move here. We're extended by $11 from the ADMA. But I'll jump into that as we get into the meeting here. All right. Juggling a couple of things. All right. So great continuation day today, which is what we discussed for the morning meeting. So SPYs here closed up 1.5%. Q's up a stellar 2.5%. And the IWM a little relatively weak today, up 1.4%. So we did gap up this morning, which I think made the open entry points maybe a little bit tricky, like in the first few minutes of the day, but we kind of adapted and adjusted to that very quickly. So what we discussed in the morning meeting was, in an ideal perfect world, we had 2 great rest days. I think in an ideal world there would be 1/3 rest day before continuation. But what we chatted about is we've kind of hit the point here from a momentum perspective where if this market's got good momentum, this ADMA is kind of just about caught up to like yesterday's lows, not quite there, but just about there. And you could look to start building in on some longs. What made it a little bit tricky was the gap up, because the gap up has you again slightly extended. But this is classic price action, right? I mean, even if you go back to here, if we recap like part of July, you had these 3 days up, 3 days of rest, 3 days up, 2 days of rest, and now kind of continuation. My original thought process, and somebody had asked me about this at one point intraday today, about starting a short, kind of. So I think someone asked me that at maybe like 2 o'clock, like looking for shorts, looking for hedges. Do I want to do it yet? And my first thought process was, no, I probably don't want to do it, because this is really just day one after 2 days of rest. Like if you show me that the strong upside grind that the market had today continues all day tomorrow, and now we're at 420, then into the close, I'll look to be a little bit more aggressive, maybe on beginning to put on some shorts or some hedges. But I kind of adjusted my mentality a little bit to that when I was looking at the degree of extension specifically coming from the Qs here, which have obviously been a leader. They were a leader today. Qs, even right as we're talking, are at 322 or so, with the ADMA at 312. So we're extended by over $12 from the Qs. So I started shorting some T-triple-Q into the close, originally meaning for that to kind of just be a day trade. We ended up not happening so much, but a lot of times on these strong up grind days, like I've just seen it where traders are trying to short at like 1-2 o'clock in the afternoon. And it's just too early. It's just too early. You got these buy programs that are just on today. Where specifically the flows are coming from, we could speculate on that. But you got these buy programs that are on, and shorting at like 2 o'clock in the afternoon, I find on these types of days is consistently too early. The buy programs are just on, and you're trying to battle them. But sometimes those programs turn off in the last hour of the day, particularly the last half hour of the day. So that's when I started kind of looking for maybe putting a short on just for like a rollover into the close, which really didn't happen. It really didn't happen. We kind of ticked even higher. My plan was basically just to trade it and kind of keep my Q position. T triple Q is what I was trading into. Oh, it's such trash, that headline. That is such trash, that headline. Hold on a second. I gotta text somebody about that. So, Warner Brothers is announcing the merger of HBO Max and Discovery Plus streaming platforms. You're taking like one of the most high quality streaming platforms that's out there, and you're combining it with one of the most trash streaming platforms that's out there. It makes no sense what this company is doing. Discovery, these guys are the absolute, like, the worst. Everything I'm hearing that's coming out of this merger is mind blowing. They're $55 billion in debt. There's a mass exodus of all the Warner people that built the company into what it is because no one wants to work for these new guys that are coming in. It's totally crazy. Sorry, just let me get this quick text out on this. Yeah, it's so bonkers to me. Anyway, so that's what I was looking at, kind of into the close there. So I did end up keeping a little bit of this T triple Q. I don't need to be heavy in it. My longs have paid me so well over the course of the last few weeks here, like we've discussed. The game plan of reward maximization, trimming and trailing. I've said this many times in the past, particularly this year, that a lot of times you do the right things on a specific day. And if you follow kind of my principles of trading, where you're going to kind of trim and trail and have a game plan in for reward maximization, and the idea that I'm going for is what I call unlimited reward, which obviously unlimited reward is like, it's a theoretical thing more than anything else. But when you capture the trend, when you're in a win-win situation and that trend kind of comes in on your side, it becomes realistic. I think my price in Apple still is like $137 from that initial entry that I had, and you're just riding this thing all the way up. Like, if you asked me when Goldman downgraded Apple and we came in and bought that day, and we're buying at 137 and change or whatever it was, if I thought that a month later I'd be, booking profit at $165, I would say, yeah, I mean, probably not. But if it happens, I'll make sure to have some position for the run. So that's a lot of what I do. At this point, the runs become so big that I have kind of liquidated a little bit. Like, I got out of Robinhood, I got out of Peloton. They were kind of some nice moves for me there as well. But that's just the game plan, trim and trail. And the market did exactly what we were looking for. And by the way, awesome teamwork in the virtual trading floor. Totally love to see it. Um, it's just been super solid. The ideas that we had at the morning meeting, plus the intraday callouts today, I mean, it really couldn't be much better than this. What did we talk about today? We talked about Editas. I don't know if anybody caught it as kind of an opening long. The problem with this one was that it gapped up a little bit too big. We talked about Under Armour, which I guess didn't close super well here, but that opening trade was pretty decent through the level. We talked about Moderna through or versus 166 as an opening long. Not sure if anybody captured that, but that was just an incredible move. And then some of the intraday callouts that we had. I think the intraday call out of the day was the buying on this 9:45 a.m. pivot. We talked about it for the SPYs. You could buy the 9:45 a.m. pivot for the SPYs. That money's shaking you out. But where the relative strength was in tech. So we called it out for the Qs. We called out in Apple going long versus this low. We called out in Google, which was acting strong very early, just inside 5 and up. Like, if you took any of those trades today, it was just money. And I'm sure I'm forgetting some. So just a awesome day today as far as the intraday communication, the timing on it, risk reward on some of these trades was just phenomenal. And a sock sell, yeah, that was another one. The sock sell was actually a little bit trickier. Where did we call out that long? Was that this inside five and up? I honestly don't even remember. Um, on that pullback, I remember being a little nervous about that one because the AMD was at the open. Because oh, that's right. When I saw AMD getting bought up here right away, we had talked about SOXL in the morning meeting because the SOXL 20 level here is pretty crispy. So we talked about SOXL, but I was a little bit nervous about this because of the AMD earnings and the gap down on the earnings. But we also said was this thing's basically just gapping down to the 80 MA on the daily chart, right? So let's kind of see if this thing can catch a little bit of a bid. So I saw in the beginning of the day that they were buying this thing up right away, just like they've done with so many other earnings reports this season where they've gapped down. That was kind of like the all clear sign to me that you could potentially go after this SOXL. And this was a trickier trade. This didn't give like that same immediate gratification that the Apple or Google trades did, but still held in that opening low and paid. So I don't even know what to say. Like just a fantastic little track record the teams had recently on those call outs. So pat yourself on the back if you caught them. If you didn't catch them, that's okay too. Just ask yourself when you're doing your journals, why not when it was communicated with the team, what adjustments you need to make to your strategies, to your approach to continue to improve. That's all I got. I don't know. I feel like I'm taking a little bit of a team victory lap here today, which I don't do too often. I'm always thinking about the next trade and the next market move, and I'm still doing that right now. But I don't know. I think a little victory lap might be fair for the team. I know my P&L deserves it. I hope yours does too. That's all I got. I really don't have anything specific, and I'm kind of monitoring and partially trading a couple of names here. I'm not allowed to talk about what I'm trading as I'm trading while I'm on the live stream through YouTube. So I got to keep that to myself, but it's distracting me slightly. Questions, guys? What do you guys got for me? Let me scroll up here into the virtual trading floor, see if I missed anything. Still getting used to the times being on the right now with the new ETF. Yeah, so just Josh's question, which I already started to kind of talk about a little bit. He's asking max drawdown from the highs today. So I wouldn't count on this, is the first thing I would say. I wouldn't count on the market ripping all the way down. For me, a little bit of a hedge because of the extension when I've still got longs on for the Qs. I decided it makes a little bit of sense, and I wouldn't care if it, gaps against me or whatever. Just keeping that tight. And I can already tell you that I would certainly, for my short position, be all out of it by the time the price gets back down to the 80 MA for what I'm in. So T triple, I mean, it's the same thing as the Q. The T triple Q happens to be what I'm in. So game planning perspective right now, it's at 30, 32, 33. That's working its way up. I will certainly 100% be all out by that point. And really, if you're bullish, it shouldn't get down there and test it. It should more be like a time thing, honestly, if you're bullish. Again, or not, or just continuation. And you go back to the original reason why I was saying I didn't want to short anything today is because today's really only a day one. I know I'm looking at 2 green candlesticks from the last couple of days, but those are rest days. Today is like the real day one after that rest. So I would be more confident in losing money on my hedge than making money on it, to be honest with you. So if you're taking that as a trade, if you're shorting the market here as a trade, can the market pull back to its equilibrium zone? Of course it can, especially if this is entirely short covering and there's no new longs coming in. But if you want to just talk about pure technical analysis here, we're probably a little bit early on this trade. So make sure you have a game plan out for risk management in order to exit the position. Is Warner Brothers moving on that headline? Doesn't look like it. It's exactly where it closed. Crazy. All right, what else, guys? Oh, SoFi. How could I forget to bring up SoFi? This is by far my best name today. Also mentioned this one in the morning meeting. Mentioned I didn't really like the $7 pivot, but I also mentioned in the morning meeting that this was worth watching on the intraday because Um, that earnings report I thought was absolutely stellar out of SoFi. Like just completely crushed everything across the board. The growth is still there. No indications of a slowdown. Yet the stock is super beaten up. They trade this thing with a lot of the other fintech companies. It trades with Upstart. It trades with Affirm. I don't think it should. They're different companies. SoFi has a bank charter. I think it's a significantly better company than those other ones. Um, and again, that earnings report was just massive. So my thought process, and I remember even thinking this after hours yesterday when I was trading it in the afternoon meeting, was it was when it was at $7 after hours yesterday, and that was like the resistance after hours yesterday. I struggled to even get above 7. I just couldn't understand how this thing wasn't higher. So they gapped it up a little bit further this morning, which kind of made it a bit trickier. And then after a brief pullback in the first like 7 minutes, this thing just caught a bid and did not look back. And then we called out this little bull flag that came in here. Market pulled back a little bit, but this thing held up. The ADMA caught up. This is perfect bull flag continuation pattern here. It didn't go as early and as fast as you would like it to, but then it kind of came into this upside grind. So that's the easy trade, Steve. And the question on can it run? We'll see. I mean, that's already a pretty big run on a percentage basis. This thing was at $6 a couple of days ago, and now the stock put in a high of almost $8.50. That's a big initial run. But this $8 is a really big resistance level. So we're potentially through that, but very extended. So I don't trust this. Technically, the close above $8, so it's a close above resistance. You could say it broke out above 8, but with this degree of extension, I don't trust it. I need to see how it sets up. And then you got big resistance at 10, and then you got really big resistance at like 13 to 1350, which I remember pretty well because it was just a handful of months ago. But those numbers were fantastic. One of the problems with this stock is it got so much thicker. Um, and I can tell you why that is. It's for two reasons. One was that the company that they bought a company in a stock deal. I don't remember what the company was or what they did, and they're saying it's good for their business, and I believe them. But it was a stock deal, so they basically bought the company with shares of SoFi. So it just meant that a lot more shares of SoFi kind of came online. That, and I'm pretty sure, along with all these types of companies, that you've just got employee compensation is heavily stock based, and that makes it thicker and adds to kind of that tradable float over time. Um, so that's one thing I definitely don't like about SoFi now. That like I remember trading this thing back in like 2021, and when this thing caught a bid, it could just run so massively because it traded pretty thin, and then it just got a lot cheaper, which thickens it up also. And then they kind of did that company announcement. I think that was back in here when it was still closer to $10. So this thing trades a lot thicker, which makes it kind of more difficult to be able to run in the way that we've seen it in the past. The float's kind of just high. But this is a great start. I think it's a fantastic company. I'm super bullish on the big picture of this company. The earnings report was fantastic. By far my best name from a P&L perspective today. And we'll see what it can do. I want to see how well it handles the upside extension now over the course of the next several days. Could we just get a day 2 tomorrow and we're working our way up to $9? Yeah, we could. We could. But I'm more interested in seeing what happens when this thing chooses to time or price correct, what that looks like, and how this ADMA on the daily chart, which is still sitting at $6.80, works its way up to $8. Because that's going to need to happen in order for us to be able to get further continuation on it. But I still got stock. It's one of my heavier positions. Even after today's close, it's still one of my heavier positions. Even though I did take a lot off into this run, I had a lot, and obviously we'll continue to monitor that situation on the extension. From Jackie today. Today I was looking at shorting AMD once we failed to hold 97, and it seemed to be rejected the VWAP and 5-minute ADMA around 10:35 to 10:50. 10:35 in here. Okay, yeah, I don't have the VWAP in my charts. There was some divergence in the Qs that were showing relative strength. The SPY was somewhat neutral, and the IWM was weakest of the three. so I didn't have high conviction for the short. Okay. Would you say this was a good idea for a trade, and can you please go over the layers of probability behind this trade? Also, since AMD was trading after earnings and was in play today, would that give you more conviction to take it short despite what the market was doing at the time? Yeah, for sure. Um, starting with the daily chart, because we always want to start with the daily chart, and I know that your trade here was like smaller time frame, and it was based on the fact that it was on earnings, and I understand what your trade was. Even with that, we want to start with what the big picture is telling us, and the big picture would say to me that's against shorting this thing. My game plan for the most part with these semiconductors, like I said in the morning meeting, was to kind of be hands off. I really wanted to see what AMD could do, because on the one hand, those numbers did not look fantastic to me. They didn't look terrible either, but they didn't look fantastic. It's had a pretty big run into this report. It's gapping down on it, but the flip side of it is that the chart's been super bullish, and all it's doing, even with this decent sized gap down on the earnings report, is gapping down to the ADMA, gapping down to that upper band of equilibrium, which just based on pure technicals and forgetting for a second that it has earnings, that would actually be where you would want to start to look for longs, right? Is into that equilibrium zone after it satisfies its upside extension. In this case, it's satisfying its upside extension um, just kind of via the gap that was coming from the earnings report, which makes it a little bit trickier. So I would say that the daily chart is against you. The second thing that I would say is against you is how it traded off the open. Uh, for that, a trade that I really like is shorting when kind of the equilibrium area catches up. A lot of times it's just directly the ADMA on a stock that gaps down big on earnings, or the opposite on a stock that gaps up really big on earnings, right? Gaps up really big on earnings, it's extended. As soon as that ADMA catches up, or the price comes down to that ADMA, a lot of times it's kind of where you get a pivot point. It doesn't have to be perfectly the ADMA. Sometimes it's more broadly this equilibrium area. The issue, and I want to make sure that I explain this right. One of the things that I'm looking at in that circumstance is kind of how the stock gets to equilibrium. Like, I don't mind an upside price correction and the ADMA catches up, and then you get that pivot and you short off of it. I definitely don't mind a time correction where it goes sideways and that ADMA catches up. I get a little bit nervous when they buy it up the way that they did, meaning like there's almost like momentum coming in to the long side on AMD of people who are saying, "Oh my God, I've missed the rally in AMD and I need to get in it, and this is my opportunity because it's gapping down big on this earnings report and whatever. We don't care. I want to be able to buy." Like this buying was like very fast and furious. Uh, so basically, what I'm trying to get across is that's the trade that I'm looking for. Is that like equilibrium area short? I know you were looking a little bit later here in the morning, um, but I'm also paying attention to how it gets up there, and the way that this gets up there makes me nervous on the short. So I'm looking at a stock now where I think that the earnings report is just mediocre. It's had a big run into it, so it could definitely go down on it. But I got a really bullish looking daily chart, and the way they bought this thing up off the open makes me a bit nervous. Now, it looks like you didn't get involved in any of this chop up in here because trying to short anywhere in this area, and I wouldn't have even hated like if you tried to short like off of this high, I wouldn't have hated that. You know, it overshoots 21 EMA, it almost fills the gap, it puts in this little kind of topping tail after a run where this thing just went from $94 to 98.50 and you know 25, 30 minutes, whatever it is, and you're trying to short off of that pivot. I certainly don't dislike that. So that would kind of be, sorry, I got distracted by position. That would be one thing that I would mention if you tried it there. But that's all choppy. It looks like you didn't get caught up in any of that chop, and now it's kind of working its way down, and you're shorting this thing more or less on the way down, looking for. I don't know the specifics of your execution though. I guess would be one thing I would say. Like I'm not just going to short off of a VWAP or off of a ADMA at like 1035, 1050 even it's grinding down. I still want like that trade. You know what I mean? I still want that um, uh, execution set up on the time frame to be able to enter. Like I know, look at Airbnb real quick. Like Rowan called out a short, and again, love the teamwork here on the team. Rowan called out a short in Airbnb versus this high. That's a fantastic call out. Also a little tricky, right? Because it made kind of this opening pivot, and now it's breaking above that pivot, but it's into the 21 EMA here, into that upper band of equilibrium. It's giving this doji. He knows it traded down on the earnings report, and he kind of nailed just the timing of the short versus that, and caught this move down, and sounded like he did really well with it. So I still want that like execution setup to come in. I don't really see it in AMD. I do totally agree with you that the market becomes we'll call it a reduced layer of probability in a situation with an earnings report. Does the market still matter? Does the strength in the queue still matter? Yes. Yes, it does. Sorry, a second here. It certainly matters. But it matters much less. This thing's going to be trading in its own world a little bit. There's going to be a lot of institutional buyers and sellers, the big players that are out there that are kind of changing around their approach a little bit, entering their positions or exiting their positions, and there's so much heavy buying and selling that it negates the impact of the market to a large degree, but not entirely. So I think you still got to pay attention to the market. The market is still a layer of probability that would be against you on shorting AMD today, but I don't think it's like a big deal where that would be a reason to not take the trade if it gapped down on earnings and you're finding that pivot point to kind of be able to execute against, if that makes sense. So I hope that helps, Jackie, and good stuff. Yep. From our buddy Robert, Oxy opinion on earnings. I didn't look at the numbers too closely. They looked like they were okay. $66 is the level though, and so what I said in the morning meeting today. Oxy got brought up in the morning meeting today by someone, and I said, "Well, just have your alert in front of 66, and if it breaks, go for it. And if it doesn't, then don't." And it didn't. So I honestly never looked at Oxy the rest of the day. Just kind of keeping it simple on the breakout on the earnings report and whatever. I didn't look at the numbers too closely, but they sold it off on it. I don't want to be short the stock. Tell you that. Don't want to be short it. But I got no trigger to be able to buy it anywhere here. So it turned out to be a very weak day. $60 is a spot to pay attention to, and then 56 is a really big spot to pay attention to. So keep those levels on the radar. And keep 66 obviously on the radar also, because it could still get back there and there's still going to be your momentum. But otherwise, I'm not doing anything with it. Oil's pretty weak across the board today. Yeah, so for second day in a row, like I was kind of emphasizing in the morning meeting today, you can see where the relative strength and relative weakness is. Like yesterday's open, this is what I was describing in the morning meeting today. Like yesterday's open, we had financials, we had energy, we had growth, we had a bunch of stuff on the radar, but by 9:35, energy was off the radar and financials were off the radar, for me at least, because they weren't trading right. Even though Rock called out a fantastic call on JP Morgan pretty much at lows. They just became off the radar. There was easier things, better things to be able to make money in yesterday. And the same thing kind of repeated itself today. Like I'm just looking at some of these names that are trading so well, and I'm working on kind of, being involved in them. As soon as I see how energy is trading in this area, I want XLE to be holding 76. As soon as I kind of see how this thing's trading, I just don't want anything to do with it anymore. And financials, I guess, did rally. Same thing, though. I didn't even notice this rally in the financials because of how they were trading early on. They were trading so poorly. And I guess they broke through some intraday resistance at 33.35 and kind of woke up around 11.45. That's not what I'm looking to put a lot of new entries on anyway. So yeah, hope that helps. For Mr. Trees, man, I just keep getting smoked. I can't get it right. When I try to buy the Qs, as the price catches up to the 80 MA, the gap fills and I stop out. If I wait till the gap fills, it never does and I miss out. It goes back to what I was saying, I think, when we were looking at Jackie's trade with AMD. These moving averages are not the end-all be-all. It's got to be something else. Moving averages are tools. I don't ever buy or sell stock, ever. Like, ever, 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 ever. I don't think I've ever bought stock because of moving average is my only reason. I've never done that. I will look at the placement of where a trade is happening within versus that equilibrium area. So if I'm getting the hammer continuation doji, that's the execution that I want in the equilibrium zone where I'll actually take the trade. Like again, we called out as a team. I think it was just a fantastic intraday execution. We called out this 945 pivot. Market's opening strong. Qs are leading. You get this quick pullback. It wasn't even perfect to the ADMA, but as it was going up, as this candle was forming, as this candle closed, the ADMA is like almost there. And I'm saying we can be long things, particularly things that are relatively strong, which was Qs, it was Apple versus the low of this pivot as an execution trade. Like that's the type of execution trade that you want to be looking for. Not just like, oh, it filled the gap, so I want to come in and buy, or not just, oh, it got to the moving average, so I want to come in and buy. Like, let's say, and it didn't happen, let's say that this candle touched the ADMA, and let's say you put a bid at the ADMA and you got filled. You got great price when it closes like this, and then it's set to give continuation. I would rather have a worse price, but the actual trading setup, the confirmation of the trading setup being there, than just buying at the ADMA and assume that the market's going to go into a trend today. Because for every time you nail that like execution on that, there's going to be several other times where you get totally smoked on it because the market's pulling back for a reason. The pullback is deeper than you can handle, or the market's completely reversing, or it becomes a range day or something like that. So I want to buy when the pivot is confirmed to me. That's really what I'm looking for. So that's what I would pay attention to as well there, Mr. Trees. I forgot again to make sure my volume was good for the YouTube. So I hope it sounds okay. I apologize if it doesn't. There's a couple quick setting changes I can do right before I start the morning meeting. The afternoon meeting every day that makes the quality a little bit better on YouTube. Just was kind of juggling a couple trades here after hours. Cool. So next year from Mike L. Would you say that most day trades, or 80-90% of them, should be short versus the high of the day, or long versus the high of the day? Otherwise, it gets trickier. No, not necessarily. Not necessarily. Um, definitely, I'm gonna say actually definitely not at those percentage ratios. That's gonna be a trade where you're buying versus opening lows on things that are strong. Like, oh, another. How could I forget? Facebook today. Talking about our victory laps. This Facebook we talked about in the afternoon meeting a little bit yesterday, and then we talked about it again in the morning meeting for the inside day and up. And then we call out a second trade. Here's another example of it. We called out a second trade off this pivot. I know it was called out because I called it out. It was my call out. This thing had this massive run. It's so strong. The bull flow is hitting. That news was hitting on speculation that they're issuing bonds to buy back stock. That's massive. Even at these interest rates, that's massive. That's what Apple did, but we won't say if we think Tim Cook is smarter than Mark Zuckerberg, because Tim Cook was doing it when interest rates were negative and was doing it with 50-year bonds or whatever at like 1% or something crazy. And it was like entirely to raise cash that they don't need and to continue to buy back their stock. Just crazy. But yeah, with that news hitting, with the way this thing's trading, there's another one where we call it. So Facebook, another one here. Two awesome trades. Through this area versus that opening low, and then off of this pivot. So I don't think 80-90% of your trades need to be like this, where you're long off that opening low, or shorting off that opening high. I don't think it needs to be that high of a percentage, because you're taking breakout trades where you can use an ignition bar that's not necessarily going to be like the low of the day, or you're using these trend continuation trades like what got called out in SPYs, Apple, Facebook today, or you're using the inside 5 and up momentum continuation trade like what we had in Google today for continuation. So I don't think it's going to be that high of a percentage. What are our thoughts on PayPal loan through $100? So I know here's another great trade that got called out intraday, and it was from Pat, and it was short through $100. So another really good trade. I wasn't involved in that one, but once again, awesome teamwork. Great call out from Pat. I want to see some. So PayPal did not trade well intraday. Reminds me a little bit of how Pins traded yesterday. Pins didn't trade well at all intraday, and then Pins had a super tight day today, above $22. I want to see what these things look like after the. I want to see what these things look like after they're no longer extended. Whether it's so far that actually traded really well today, or whether we're looking at PayPal and Pins that didn't trade as well after their gap up, after their numbers. I want to see what happens with this Pins when the ADMA catches up to the action. I want to see what happens with this PayPal when the ADMA catches up to action. Because it's not, for either of those names, it's not ideal on what you want to see today. But it's not necessarily the end of the world either, because the gap was so big. So for now, I think let's just be patient. And let's just wait and see. I don't. Pat had a great call on the intraday short. If you took it, fine. But just purely based on the daily chart here, I don't want to be short PayPal. I don't want to be short PayPal after that report when they're above massive $90 resistance, when Elliott is involved in it. I don't want to be involved in that to the short side. Maybe if you find a day trade setup like Pat's call out and it closes with a $2.50 profit cushion like his trade gave, and you keep a little bit as a swing just to see if this thing. I mean, PayPal could retest $90, and that actually would be a spot to look for a long. So if you got that Pat short on and you keep a little bit overnight, you could be game planned here with a reach target for a little bit of your stock down to $90. If you're not in it, I don't think I would short it, at least not based on this daily chart and that earnings report. And I don't think I would buy it right now either, with how this candle closed and with the extension here. Let's see how Pins price and time corrects the upside extension from the gap, and that could potentially set us up for the next trade for these names. From Justin here, can you give some advice on how to cancel out the market noise on low time frames when you're trading based on higher time frame trends? At times, I will sell on pullbacks on the 1 minute chart or 5 minute charts after I see a few red candles and I'm missing out on the big move hours later because I already sold most of my position. First piece of advice, get rid of your 1 minute chart. Get rid of your 1 minute chart. Take your 1 minute chart and trash it. I don't even have access to a 1 minute chart. I can't pull up a 1 minute chart to review a trade on a 1 minute chart if I wanted to. It's a garbage time frame. The time frame is too small. I think 1 minute charts hurt traders. I don't think that they help traders. I have access to a 2 minute chart. I never look at it. I don't even know how to get to it. There it is. I have access to a 2 minute chart. I pretty much never look at this thing. Every once in a while, if I just missed a tick on the tape and I want to see where that tick was, I'll just click on my 2 minute chart to see what the tick was. That's literally the only reason I even have a 2 minute chart at all. Otherwise, anything smaller than a 5 minute chart, you should be looking at the tape. And you probably shouldn't be looking at the tape because you might not know how to tape read. Most people don't. And I don't think that tape reading is a super important skill to learn anymore. I think learning technicals is the important skill to learn. And you become a master of technicals and now you want to start adding some tape on, call me and we can have a conversation about it. I also do have an intro to tape reading class in my training program classes. So first thing, if you're trying to get rid of the noise on those low time frames, don't have the chart. Get rid of your 1 minute chart. It's trash can chart. I know Pat might disagree with me slightly. Pat has one opening drive trade that he takes that uses a 1 minute chart. And I don't want to speak for Pat. You can ask him next time he does a meeting or ask him when he's on the radio one day. He does it specifically in earnings names, and it's a very simple, in the earnings names, when there's momentum, the break of the first 1 minute bar. If the break of the first 1 minute bar is to the long side, he buys the break, I think, with the stop at the other side and just looks for what kind of momentum can come in. Outside of that, I don't think he uses them either. But again, I don't want to put words in Pat's mouth. Pat's an awesome trader, so you can ask him directly. But if you're struggling with the noise on those low time frames, again, I just can't emphasize it enough. Get rid of these small time frame charts. The smallest time frame chart I'm ever looking at is a 5-minute chart, and I am always looking at it in conjunction with the daily chart. You want big reward? Big reward comes on daily charts. 5-minute charts are how you execute the potential opportunity for the big reward that's on the daily chart. That's a lot of what we're doing, right? Again, whether it was the Apple trade today, the Google trade today, the Facebook trade today, I'm interested in those based on the daily chart. Like, Apple, we discussed along with the market, it had these 2 days of rest. And if it's going to be really strong, it could take off today. We literally said that in the morning meeting. I know that on the daily chart, this thing could give me an entire another leg today on its daily chart. What does that look like? What does another leg in Apple look like on the daily chart? Well, guess what? It gave it. Look at what the candle did today. Another leg up in Apple means, $6 of intraday upside, $5 of intraday upside. That's what I want to position myself for. So when I'm looking at the execution on this 5-minute chart, when I'm seeing this pivot come in and I'm calling this out, I'm not calling this out because I love what this thing looks like on the 5-minute chart. Well, I mean, I am. But I'm calling this thing out because I love what this thing looks like on the daily chart, and the 5-minute chart's confirming it and giving me the execution. So I could come in here and get involved in Apple for risk that's on a 5-minute chart. Buy stock at whatever, 162.40 with a stop loss at 162.08 and risk 32 cents in this thing, and then have the potential of a $4 move to the upside where it closes strong, and then maybe you're swinging 25% of your position for upside continuation. That's where the reward comes from. I say it every once in a while. It bears repeating. Big money comes from catching big moves on size. That's not easy to do. It's not easy to have size to begin with because size has it's not a perfect correlation, but size has like a correlation to dollar risk, right? It's not necessarily always this way, but in general, the more tier size you take, it means the more dollar risk that you're going to be taking. But it doesn't always have to be that way, right? Because you could risk $100 by buying 1,000 shares with 10 cents risk, or you could risk $100 by buying 200 shares with 50 cents risk. But obviously, if you buy 1,000 shares with 50 cents risk and you buy 200 shares with 50 cents risk, it's risking a lot more when you've got the size, right? So making big money in trading, I think, comes from capturing big moves and ideally doing it with size. The only way that you're going to be able to do it with size is if you're able to find executions where the risk makes sense to have that size. And this, by the way, is the entire benefit of being a professional prop trader and getting the capital access that T3 Trading Group provides to its traders, is that you can look at this trade and you don't have to be concerned about how many dollars it costs to be able to buy the stock. You are just concerned about what your risk is going to be. So if you can afford to risk $300, you're coming in, you're buying 1,000 shares of Apple right here. If you just end up trailing 500 shares or 300 shares of that, that's a big move. Let alone if you end up getting to the scale with your personal trading where instead of risking $300 on it, you're risking $3,000 in it. And now all of a sudden we're talking about like really, really big sums of money being able to come in. And you don't even necessarily have to have a massive sized account to be able to do those types of executions. So I hope that helps, Justin. Great question. Yeah, Roku got stuck today. I saw that Coursera did also. This is where these things are going to be more difficult, right? Big rally. Now they're into the moving averages. This is where it becomes trickier. I noticed that Roku did not really participate in the rally. I noticed that this Coursera has kind of struggled here a little bit now as it's gotten to it. Hasn't participated the last couple of days. So it's exactly what you would expect. It's why this is a good spot to be booking some profit, but also keeping some and seeing what it can do if you can work its way back to up to $100. From Jackson here, is there anything different you do when trading thicker stocks in general, Ford or SoFi? Do you look for different things on the tape? I was in Ford today, but I was not gathering any info from the tape because of how thick it was. Yeah, that's generally going to be accurate. Generally, but not always going to be accurate, I guess. With those thick stocks, it's just reading the tape. It's like a lot going on there. It's hard to identify natural refreshing buyers and naturally refreshing sellers. I don't like super thin stocks either. I like them to kind of be somewhere in the middle. I don't like things that are extremely thick. I definitely don't like things that have massive spreads. I want stocks that have enough liquidity that I can really get in and out of them, but also are light enough to be able to kind of move and be fluffy. So as far as SoFi goes, I don't think I did anything as far as tape reading with that stock at all today. It was just kind of following a preset game plan that I already have, and looking at the technicals on the stock. So yeah, hope that helps. Yeah, so I wasn't watching Facebook directly off the open. It was something that we just kind of communicated in the morning meeting. But I think someone on the team, Josh or somebody, called it out after it already put it in this opening low because of the strength that it was kind of coming in with to be able to take that buy. So it depends on kind of how you were watching. Like if you bought it the second the market opened, you may have gotten shaken out in this very quick tail. If you were a little bit patient and the tail came in and now it's on the way up, that could have been your execution. I don't have fantastic feedback for you on the first 5 minutes of the day on Facebook because I missed the trade myself. I wasn't in it. Even the second trade that I called out for the team, I didn't take for myself. I did not trade Facebook at all today. So I don't know exactly how this kind of candle was formed or how that call out happened. I know the second one I did call out. So it was just I was watching the stock. I was trying to find because I think the market was maybe pulling back a little bit at that time. I was concerned that the market was going to pull back at that time. Oh, we had a 10 a.m. number come out today as well. So I was a little bit concerned on a market pullback. I remember just seeing how well this Facebook was holding up and kind of ticked almost into the ADMA and then was delivering this tail. So I called out the long versus this low before the candle was closed. So I think like your price on this thing could have been definitely below 166. I don't remember exactly because I wasn't in it, but definitely below 166 versus this low. So those are the ways that you're looking for executing it. Either that open or you're looking for that like continuation kind of tail here. Yeah, and it's always tricky when a stock gaps above the spot that you want to buy. A lot of times what that turns into is if you're buying the open, you're buying it versus the spot that you originally wanted to buy. If you did that in Facebook today, like you bought the second this thing opened versus yesterday's high, you would have gotten shaken out of the position. So somehow it had to be on your radar after that low came in and it was tailing and coming back up within that bar to be able to buy versus the low of that tail. Pat here saying if I'm ever looking at a 1 or 2 minute chart, I promise you I'm looking at a 5 and 15 and daily at the same time as well. From Andy here. Sorry, let me just check. From Andy here. I've been struggling with taking good size on good ideas. We've talked many times about game planning with an Excel sheet and experimenting with different entries and potential outcomes. This morning I used that idea more heavily in an attempt to get clearer thinking about size, one-to-one covers, stops, targets, etc. It really helped me visualize my executions before taking the trade, and I felt much better about how much size I need to get decent profit. I'm loving everything I'm reading here. How much risk that size means, what happens if I don't get my one-to-one, my risk-reward ratio, and so on. I feel like it made a huge difference. Thanks for the advice. Awesome. So not a question, just feedback, and I love it. And it's something that sounds like Andy's getting some success from it. I know it's made a really big difference over the course of my career. It's something that I really suggest because, guys, we spend so much time talking about technicals. It's not the most important thing. It's really important. You need to know your technicals because your technicals are how you execute. But the most important thing is money management and risk management and the game plans that you develop around money management, risk management, and then game planning for reward maximization. I'm seeing Diego saying that game planning is huge and randomness is a killer, and that's exactly correct. What we are seeking to do as traders, the market is full of randomness. We are seeking as much as possible to take the randomness out of the market. And the way that we do that is by having a consistency and consistent approaches and game planning. That's the only way that you can take the randomness out of the market. And there's always going to be a degree of randomness. That's what creates the fact that it's a game of probabilities, right? It's even if you have that A plus setup, that A plus setup will still not work 100% of the time. It's just going to work a lot more often than that C plus setup, right? Um, so, highly recommend that traders really spend time game planning, thinking about, focusing on, game planning and risk reward and trader math, tier sizing, how much dollar risk is appropriate for you based on the room that you have to give it. I mean, I just know for myself. It's just because I've been doing this for so long. Um, my P&L just went up massively for some reason. I don't know why. Oh, Pins is giving a false print. Pins just gave a false print at 46.55. I'm like, well, that's interesting. Almost got excited for a moment. Thought I was gonna have my best day ever all of a sudden for a quick second there. And lost my train of thought all at the same time. Um, what was I even talking about? Oh yeah, so play with those spreadsheets. I was saying I know for myself, and just because I've been doing this for so long, I don't really have to think about it very much anymore. I just see when I want to enter something, where I'm entering, where I know the stop loss has to be. I know the spacing it is, and then it's like I just press the button on the size that's appropriate for the amount that I want to risk, like almost like naturally without like having to have a thought process around it. Most likely, if you haven't been doing this for as long as I have, and I'm not saying I'm smarter or anything like that. I'm just saying it's practice, and I've been doing it longer. It's most likely you can't do it that way yet. You need to have a little bit more of a thought process on, oh, this amount of risk for this trade means how many shares am I taking, doing the math, and then kind of coming up with it. But you want to learn to be able to internalize all that, and you internalize all that by just repetition. And part of that repetition comes from playing with those spreadsheets, exactly what Andy's talking about. I highly recommend, I read it out loud, but read Andy's comments here in the virtual trading floor and take that and implement it for yourself. From Ahmed, after all of this analysis, how do we keep it simple? Sure. So trading has a degree of complexity to it, but I'm a big believer when it comes to trading in that keep it simple, stupid saying, right? Where you want to try to keep your approach as simple as you possibly can, but at the same time you're kind of combing through the complexity that the market provides, right? And the complexity that the market provides is found in layers of probability, understanding all that information, and found within the complexity of technical analysis. Even as it's even as you can keep technical analysis kind of simple at the same time, it's understanding the difference between why this apple is a great looking pivot point in this spot, and this candle on a different day somewhere else in the chart, this exact same looking candle is not something that you want to trade. So it's basically like you can't look at things in a vacuum. That's where the complexity comes in. I can't just look at this candle in a vacuum, memorize what this candle looks like, and take it every single time and be able to make money off of it. It's this candle in conjunction with what the daily chart looks like, in conjunction with what the market looks like, and all the other layers of probability. That's the complexity. The simplicity is once you're able to kind of get through that information, just saying, oh, this is my good trade and why. I know I need to risk X amount of dollars in it. That means I need to take this amount of shares, and now I enter the position to put my stop loss in, and then being uniform in your approach fairly often, where you've got just like a set of game plans for reward maximization based on different scenarios, and you're just taking the game plan that applies to this trade and kind of putting it on top of it, if that makes sense. Um, and then you got like what Pat said. That's how you keep it as simple as possible. Stock trading above the level, you want to be long. If it's trading below the level, you want to be short, right? With like support resistance type levels. Um, You know, like I'm looking at this daily chart, and I know the stock's trading above this important level. So on my small time frame, am I looking for shorts or am I looking for longs? I'm looking for longs. I'm not looking for shorts at all unless there's some sort of major extension situation that's happening. Although I don't want to fight. Like again, I said it in the VTF at one point today. I hope no one fought this market today. There's no reason to. There's no reason to be fighting this market to the short side today. Um, it's day one after 2 days of rest. Like I'm saying to you guys in the morning meeting today. 2 days ago, I'm like, too extended, we can't be aggressive. Yesterday, I'm like, getting there, but we're still extended. It's day 2 of rest. I can't be aggressive. But I'm also saying every morning that this ADMA gets closer and closer to price action, the more aggressive I'm willing to be. Ideally, would have loved one more day of rest. Didn't get it. Didn't need it. You know, this was 2 days was enough to be able to get upside continuation. And then recognizing where the relative strength was, which was in tech-related stocks again today. So awesome, Andy. Okay, cool. From Diego, played the Google call out. Worst lows today. Nice. Very nice. Then trailed on the 5-minute chart to 117.59. 117.59. I'm curious what time of the day that was. Was that? What's this low? Zoomed out to see the congestion price battles at those levels. Okay. Great stuff, Diego. Great stuff being involved in it. Yeah, so this is a good question from Elliot. That's a common question. Regarding Andy's comment, personally, I don't take big dollar risk because I'm a novice trader. So if I sell at 1-to-1, I can't really trim and trail properly. What do you suggest? Sure. So one thing that I would suggest is not being involved in trades with too much space risk. And again, I don't know what trading small specifically means for you, but let's say that you can risk, you know, even I don't know, 50, 60, 70 dollars in a trade. That means that on a trade that has 10 cents risk, you could take 500, 600, 700 shares. So you can find, and this is why it's good sometimes to be involved in some of these stocks that are a little bit cheaper. You can sometimes find stocks where you can still take even at pretty minimal dollar risk amounts, enough of a tier size that's game plannable. If you have to trade in round lots, so the professional traders, the T3 trading group have to trade in round lots. Elliot, I think you might be in a retail account, so this actually becomes easier for you. If you have to trade in round lots, it's tricky if you have less than 400 shares. If you have less than 400 shares, you're very limited from a game plan perspective. At least with a minimum of 400 shares, you can sell 200 shares at 1-to-1, and now you've got 200 shares to be able to play with. And that 200 shares to be able to play with gives you some flexibility of I can sell one at a target, I can trail one on a certain time frame. I can trail one on a 5-minute chart, I can trail one on a 15-minute chart. Gives you a little bit of flexibility. Having less than 400 shares is very difficult to be able to trade, at least as a professional trader, you're forced to trade in round lots, just from a game planning perspective. The second thing is I will be totally honest with you, because I am honest, and this isn't the best answer in the world, but it doesn't mean it's not a truth. Um, Trading is easier when you have more money and you have a bigger account. I'm sorry if to anyone who trades with a smaller account. It just is a reality of the situation. When you've got a bigger account, it allows you to take more size. It allows for more game planning ability. And like very often, I might be profitable in a trade that fails, whereas someone else who's smaller will be break even or whatever, and not make as much as me. Like the trader who can take more size on a position will always make more money in the trade on a percentage basis unless that trade just straight fails, or unless that trader is extremely greedy. And it's just a reality of the situation. And if you're smaller, there's nothing you can do about that except for focus on taking trades where um, the sense risk is a little bit smaller, so you can have a little bit more tier size, so that you can game plan. And I started as a smaller trader myself. I'm not anymore. Um, but I've been there, so I know what it's like, and I know that it's possible. It's possible to build. It's possible to be successful. It's possible to make money. I think if you're working with a smaller account, as your profitability starts to come in, you want to do everything you possibly can to build that account up. Because and I know we want to take money out of our professional trading and we want to live off that money, but you're going to be doing yourself a lot more favors, I think, in the long run if you're taking your profits and reinvesting them into your trading business, if you're dealing with a smaller account, than just like taking your profits out and spending them. Which again, I don't know anybody's personal life circumstance. We did the disclosure at the beginning, things like that. So you got to know, what's appropriate for you, and for some people you might need that money to live off of. But you gotta try to build in that scale as you can, and as you improve as a trader, and try to get bigger, because I do think it will benefit you. From the moon here, for covering risk, is it best to sell cover half of the position, or less or more? What's the better ratio? I like to do half on non-A plus trades, 50%, get the risk covered, and now take that other 50% and be greedy. How greedy depends on whether you're with the trend or whether you're against the trend. Um, I don't want to do more than that, because then I'm not going to have enough stock to be able to trade properly. I don't want to do less than that, because then I'm not really covering my risk. And I still have the potential of dealing with losses. Though again, in higher rated trades, that thought process might change a little bit, right? That higher rated trade, you might be saying to yourself, I want to be able to have a little bit more stock in this. I'm gonna sell less, but that should be, again, specifically for those higher rated trades, where maybe you got 1,000 shares and you're only selling 400 at 1-to-1, and you could deal with a small loss, but that small loss is worth it to you because you want that extra stock because you think this thing can run. Or if it's a true A plus trade, maybe you're selling either nothing or 10% or something like that at 1-to-1. You're selling nothing at 1-to-1. This is an A plus trade. I'm here to get paid on this baby. I've been waiting for you. I've been looking for you. I got the risk on. Let's go. And again, that's also going to lead to making much bigger money in the market, because now you're going to have bigger size for a bigger move, provided that it's a true A plus trade. So that's when I don't want to sell 50% of my position at 1-to-1 in that true high level trade. But for any mediocre trade that's out there, where I think I can make some money for myself in the long run if I take this 1,000 times, but this one might work, it might fail, whatever. I want to try to get those break even as much as possible, and then let them run. Cool. Yeah, what Anthony's saying here is also 100% true. I feel like being small is harder, but I think in the long term it's better, because if I can figure out this smaller sized account, uh, when I get larger, then I'll be able to scale smoothly. And I do recommend that also. Starting a little bit smaller and building into it over time. A question I get, I think someone emailed me recently with this question, but I get it a lot, is hey Derrick, I'm doing well and I want to add size to my trading. What do you suggest? And I tell you what you don't want to do there is you don't want to be like sizing up too big too fast. You don't want to go from your bad days you lose $500 to your bad days you lose $5,000 overnight. And then you were trading great, you had a great month, and now 2 bad trading days in a row happen and erase that entire month. And the big thing is the psychology of it. If you're used to certain P&L swings, you can get comfortable with certain P&L swings. And if you just quadruple them, and you're not comfortable with how that P&L, what it looks like, and what those numbers look like, and what those swings look like, then you're going to start doing the wrong things. I think actually we just talked about this in an afternoon meeting here recently, also, right? Where I was saying, like, if your that day is $1,000, add $200 onto it. Like, add $200 into your max loss, or add $200 onto, whatever. If you risk $1,000 in a trade, add $200 onto it, because it's gonna not. It's still gonna be within like the normal P&L swing skew that you typically have, where it doesn't feel that unusual, but you're actually starting to get a little bit bigger slowly. Whew, all right, 520, let's call it. Awesome day-to-day team. Great communication in the virtual trading floor. Great open today. You guys rock. I'll see you all in the morning.